Hey traders, welcome to Quantsapp. My name is Varun, and a lot of traders don't know how to use open interest data quite effectively, right? So generally what people use it for is directional trades. But if you use it effectively, you can analyze where actual open interest positions are being created. So where actual option writers are placing their bets, where option buyers are placing their bets, all of these things you can learn from it. Okay, so there is a one very common misconception that a lot of traders have. So I will get rid of that misconception. I will teach you something new and something effective which you can use to analyze the market much more effectively. So it is one of my favorite data points to use out of the thousands of analytics that are available for option traders. So let's just have fun, sit back, relax. I hope you guys enjoy watching. Okay, for people who do not know, my name is Varun. I teach here at Quantsapp. For people who already know me, who have seen my videos, big thumbs up to you. Your support has been immense. The comments, I read all of those. I look at the reactions on the videos. So it has been of immense support to me. Even the negative comments have been really helpful so that they help me improve myself, right? So I always enjoy bringing the best content for you. So just keep those coming. And obviously, I cannot thank you guys enough for that. Okay. So let us start. Before we start, I would just like to explain what exactly open interest is in simple terms for the beginners, for the people who have recently started trading, who might not know what open interest exactly is. Okay. So inside Quantsapp, we have a very simple tool named open interest, which is helpful for a lot more things other than just analyzing open interest data. So I will just showcase that. So I'll just share screen. Okay. This is the screen of Quantsapp. You guys should be able to see my screen right about now. Okay. Okay. So this is the web app. Okay. This is web.quantsapp.com. So since I am on desktop, I have opened the web app. But if you're on Android, iOS, we have a mobile application. You can go and install the app from the App Store itself. Okay. So let us start without wasting any more time. Today, there were a lot of good moves in the market. Chambal fertilizer, to be precise, Chambal fertilizer has moved up by around 18% today. So just short of that upper circuit. So it's actually quite exciting. So let's see how we can analyze the open interest data. So just go to the search option. Okay. Once you search for open interest, you'll find the tool. So let me just click on the search option. Open interest. You can just click on it. Okay, so this is the open interest tool that you are finding right here. Okay, you can just search for any symbol. I'll just search for Nifty because index traders are a lot more. So I want to make the index traders happy, right? So expiry, I'll just set it as the monthly expiry because 20th June today was the expiry day. So I don't think that data will help out. Let's check the next expiry. Okay. All right, so this is the open interest data. You might see that it is very non-conventional, as in normally you look at open interest data, it looks like this, right? Vertical bars, and sometimes you might be accustomed to this, right? You might be used to this, but I generally use this format. This format is something that I really enjoy. Reason being, you can easily identify the resistances and supports created by open interest. Right, so I'll explain that in a second. But let me just explain the concept of open interest for people who do not know. I'll just zoom in on something real quick. Can I zoom in? So there's some blank canvas here. I'll write for you guys. I'm not a big fan of the new whiteboard that Zoom has introduced, so I'll just add this here. All right. So open interest. What exactly do you mean by open interest? So open interest, for people who do not know, it is nothing but number of open contracts. So since futures and options both are contract-based instruments, open interest just helps you in identifying where new contracts are being added, where old contracts are being squared off. Okay. So open interest or OI, if I classify it, one open interest equals one buyer plus one seller. Okay, open interest is nothing but one buyer and one seller. So this is nothing but open interest. All right. How do you further classify this? If this was futures, then it is very difficult to understand where the market price is going to go. Like for example, let's say if future price is 20,000. Just a simple example. Let's say future price is 20,000. So this is CMP or current market price. Let's say if there is OI addition of around 100 contracts. Okay, so 100 new contracts are being added. Where should market's price go? Where will the current market price go? Should it be bullish or should it be bearish? So here I know that there is 100 buying quantity and 100 selling quantity, right? So 100 buyers plus 100 sellers. How do we know where market is going to go? So we do not know. Now futures has a very linear payoff, hence option. So future buyers have undefined risk and future sellers also have undefined risk. So hence we have to look at open interest data from both of their perspectives. But options is different. Options is a very non-linear and dynamic instrument. So in that case, let's say if I switch it with option, let's say it is 20,000 CE call option or the at the money call option. If I say that open interest has increased by 100 contracts, here what will be my view? I'm sure everyone knows if a call option has increased open interest or if a call option has open interest addition, what the view of the market is. So this is because options open interest is always viewed as from an option writer's perspective. Why? Because option writers always have undefined risk and option buyers always have defined risk. So option buyers can go for random trades, but option writer cannot afford to lose. When option writers are losing, they lose a lot more than option buyers. So option writers always have to think twice before entering a trade or creating a new position. Simple as that. So options open interest is viewed as from a seller's perspective. So if there is call addition, that means call open interest is higher. So market is supposed to go bearish because call sellers want the market to go bearish, right? If put open interest is higher or put open interest addition, that means markets is supposed to go bullish. Put seller's view is bullish. So that is a general idea. Now this is always a very common misconception, mainly because we are just assuming that there is writing happening, right? We do not actually know whether buying is happening or whether writing is happening. No one actually knows that, right? We are just assuming that option buyers are more aggressive, option writers are more aggressive, but generally option writers take the idea, right? So this is just an assumption that we traders have. What about the real market scenario? How will you analyze that? So let's just try and analyze those small things. So I'll just consider these big open interest bars. So how to read this data, I'll explain, right? So there are green bars, there are red bars. Okay, there are some green bars, there are some red bars. Green bars are call open interest, red bars are put open interest. Okay. If there is a solid green color like this, okay, you can see there is a small portion of it that's solid green here. So solid green color is nothing but call addition. So that much addition has occurred in today's date. So from previous closing yesterday when the market closed, open interest was still here. Now it has added. Okay. Same thing on the put side. If you see a solid red color, there is put addition. But if you see a hollow color or a hollow portion, that means there is unwinding. So open interest was here yesterday. Now it has fallen. So decrease in open interest. On the red side, if you see, that is put unwinding. On the green side, if you see it, that is call unwinding. Okay, so that is how you analyze. Now you can see that there are a lot of strikes, right? I will look at the bigger strikes or the bigger open interest data, right? There is a big bar here, there is a big bar here, here. So these are the 5 big bars through which I will cycle through. I will look at this one, I won't look at this one, I will just ignore those. Okay. So let's look at these. I'll just clearly zoom here. So put strikes on the bottom end and call strikes on the upper end. Okay, just zoom in a bit. Zoom in a little bit more, and that is perfect. Okay. If you hover on any bar, you can see the exact strike of this. Like if I hover here, I know that this is 24,000. If I hover here, I know this is 25,000. If I hover here, this is 23,000, right? So on and so forth. Now, if I just look at the heaviest call or the biggest call option, I know that the heaviest call or the call option with most open interest is 24,000. So call sellers have actually sold this strike aggressively. All right. Similarly, for put writers, it is 23,000. So these act as a resistance and support. So this will be your resistance, this will be your support. So heaviest call is a resistance, heaviest put is a support. How I generally view is whenever option writers are writing, right? Let's say whether it's call writers or whether it's put writers, whenever writers are writing, I generally look at it from a very simple perspective. Okay. All right. I generally look at it from a simple perspective. So let's say call writers have sold here and here. In between, wherever you see open interest, that is where they have bought their hedge positions. That is where they have bought their hedge positions. Right? As simple as that. Similarly, on the put side, if you see market here, 23,000 is the heaviest put. Then 22,500 is one and 22,000 is one. Right? In between, there are all hedge positions. So the major action that is happening is between these ranges. These 1,000 points, this is where the major action will happen. If the market expires between this, that is when the option writers will make the most money, but it never expires between here. Right? Market will always move away from these ranges, right? So if it moves between these ranges, in that case, there is a good chance that you can make decent money. Right? You can identify what the direction of the market is. On the basis of that, you can go and trade. Right? So just to go around the user interface a little bit, you can remove zero. So removing zero means it will remove all the strikes that has zero open interest. You can keep it, you can leave it. You can select expiry, whatever expiry you want. You can see the lot size of a particular script. You can change the script. Okay, you can just look at call open interest. You can just look at put open interest. You can look at both as well. You can see the strike-wise PCR. I don't find this a lot more useful. Strike-wise PCR no one wants. Right? So strike-wise PCR is still there if you want. You can set the from date. So if I want to look at the open interest data today after 3 p.m. So I'll just set it as 15:00. Today after 3 p.m. whatever change has occurred, you can actually see it right there. So today after 3 p.m. you can see that pretty much all of this here has addition and all the stuff, right? So this is what it looks like. So I generally look at it from previous day. So previous day is something that gives me a better idea of what has happened today. All right, so I'll just refresh it once. Okay, we will move on to the different bar positions, right? We will move on to the different bar positions. Has it actually moved? Okay, I don't know, the data is broken. I'll just go to the home screen once and I'll come back to this screen. Okay, you can directly navigate from the tool or you can navigate from the small widget that we have. Okay, now it is fine. So there are multiple formats that you can look at. You can either look at this, you can look at a horizontal chart. So on the right hand side, it's just the change in open interest. On the left hand side, it is the absolute open interest. Okay, so you can look at that as well if you want. Okay, if you can look at the vertical chart, we have given people the liberty to look at vertical chart if they want. There is also a table view. If you just want a tabular format, you can look at it in a tabular format as well. Okay, combined format works the best. I have seen combined format works the best. You can see just the call side, you can see just the put side, you can see just call change, you can see just put change. That is also there for the tabular format. But I personally enjoy this one, horizontal chart with the additions and unwinding. This is something that I have grown accustomed to. So the same things I will look here. So today's biggest green and red bars, I will look at the change in open interest and I will analyze those things. So I just zoom in a bit for you guys. Okay, now it has zoomed. So you can actually see the position sizing here, right? What has happened throughout. So I can see on the upward side, there is massive unwinding on 24,200 strike. I'm not sure why it's there. It's unusual, but the majority of the strikes have addition because expiry is quite far off. You will see addition and market takes time to move. Okay. So the most addition that has happened today is at the strike of 22,800. Most open interest addition is at 22,800. Right, I was not wrong. 22,800 is the strike. So 22,800 put option has the most open interest addition. And on the call side, we have 25,000, we have 24,500, and then we have 24,000. So these are the three strikes which have somewhat equal addition, which you can easily view through here. So I can see currently that 23,500 is the biggest support that you will find. So tomorrow, what I am expecting is, I am expecting the market to fall slightly, and then based on data, it should reverse from 23,500. It should reverse from 23,500, and then it should reach till 24,000. So that is my expectation. In the next 7 days at least, the market should reach till 24,000. That is what the data is suggesting me. That is what the data is suggesting me. Even if the market does fall, it should not fall below 22,800. So not even 22,800, it should be around 23,000. 23,000 is a major support. So it shouldn't fall beyond 23,000, at least according to me. So that is the simplest idea that I have gotten based on open interest. All right. So 24,000 and 23,000 is the major level. But on the upward side, I can see that above all of these additions, these are mainly option buying positions or the hedge positions that have been created by these particular traders, right? So mainly option buyers, when they are buying, aside from hedge positions, when they are going for directional trades, they trade near the at-the-money option. So if you see a lot more addition on the at-the-money strike on the call side or on the put side, you can actually gauge something. So as of now, on the at-the-money strike, which is 23,600. So 23,600 has a very good call addition and a decent put addition as well. But generally, I would say that the call addition is much higher, and the markets could go up from here. So that is my expectation. 24,000 should be the level at which the market should expire, or somewhere around that level, because I can see massive put addition near the at-the-money strike, and there is a very good support there as well. You can see based on the absolute open interest, there is a very good chance that it could move on. All right, so that is how you can analyze these things. You can analyze open interest data just on the basis of this. You can look at the tool in another perspective as well. You can add some technical analysis here, but all in all, I would say that open interest data has some insight, and it can give you a very decent overall idea of where the market is about to expire. Right. So as of now, again, I'll repeat, the market is supposed to be bullish just by analyzing open interest data. The market is supposed to go bullish up to 24,000, right? Till 27th of June expiry, the market could go up to 24,000. That is what the data is suggesting me. And it should, even if it does fall down, it shouldn't fall beyond 23,500. Right? If 2300 level breaks, then you can actually think about a bearish trade till 23,000, the 500-point rally you can capture. But as of now, I feel like this rally you can capture. This 400-point rally is long overdue. 24,000, the market should actually reach there. All right, then that is it for me. I hope you guys enjoyed. I hope you guys learned something new. All the best on your trading journey. I will see you guys very soon in the next video. Again, thank you so much for your support and love. My name is Varun again, and all the best on your trading journey. Thank you so much, guys.